So, at the current rate of action, it's really hard to keep track of all the insane, corrupt, and self dealing bullshit that Elon Musk has done alongside his so called Department of Government Efficiency. But one of the biggest ones, and quite frankly, this should be a much bigger headline, is Elon Musk's war on the Consumer Financial Protection Bureau, which, among other things, is a major check on his own business empire and is something which has returned billions of dollars back to the American consumer. And to talk about this more, I decided to enlist the assistance of an actual economist, somebody who studied economics in college, somebody who's well versed in the dark arts, as I call them. My Live and Learn co-host, Econoboy. What's up, buddy?
It's going well. Well, it's not. It's going okay, I should say. The personal life balance with the geopolitical goings on has been an interesting thing to gauge out.
So wait, so what you mean is, given how well things are obviously doing politically, what
Yeah,
you're saying is your personal life is shit at the
it's going
moment. I'm sorry to hear
terrible.
that.
Yeah,
Yeah.
of course.
So listen, man. Listen, the reason I wanted to turn to you is for with my workload, it's really hard to delve into the nitty gritty of economics, especially. I mean, yes, there are time constraints, but also it bores me to tears. But this is a big fucking deal, man. It's a big deal, and so that's why I wanted to bring you on. Can you explain to my audience why this is a big deal? The fact that the Consumer Financial Protection Bureau is, at least at the moment, apparently it's on life support because of Elon Musk.
Yeah, essentially, I mean, Trump came into office, and they're gonna try to take advantage of. They're gonna really push the boundaries of what the president's authority is to do. You saw Elon Musk say something like, President Elon Musk, I should say, to show my respect. He said something like, "The education department doesn't exist, right? Don't believe your lying eyes." I mean, they're doing something similar with the CFPB, where they essentially told the workers, "Hey, don't do any work tasks. You're not allowed in the building." Very sort of mechanically shutting down the department. Like, you can't, CFPB can't exist if you basically just tell the workers they can't do anything, and that they can't work in the building. And that seems to be the mechanism by which they're trying to bypass the sort of congressional approval for this organization by just saying, "Hey, look, I mean, it's an executive agency. We can do what we want, and one of the things that we want is to not staff it. We're just going to tell the workers they can't work on it."
So let's talk about this for a minute. So my understanding of the CFPB is that it's a brainchild of Democratic Senator Elizabeth Warren, and it was brought into effect under the Obama administration, I believe, at the very end of his first term. What does the CFPB do, and why is it a big deal to most Americans, even though most Americans probably have no idea it exists?
Yeah, it's interesting. It's kind of a high impact but potentially low salience issue, because I think that although it's been billions of dollars that have been returned to consumers, it's also tens of millions of consumers that have actually been directly impacted by this. But maybe it's low salience because when you get a check in the mail from like some debt collector, you don't really think like, oh, the CFPB is the one that did this. But most simply, this is essentially a profit center for consumers in the federal government. Over the maybe 15-year lifespan of the CFPB, I think we've spent maybe $9 or $10 billion collectively just running the thing, but it's returned about double that back to consumers in the form of, hey, you were being scammed in one way or another that you didn't necessarily know. One recent case that I looked up just to prepare for this was a recent case from Performance Recovery Inc., which is essentially a student debt collector. And one of the things that they did to try and collect debt and collect fees, particularly, was to delay. You have this ability as a student loan borrower to go into rehabilitation for your loans within 65 days of default. And so what this particular organization did was they said, well, hey, if we can delay rehabilitation after 65 days, we can charge collector fees. And that's exactly what they did. They would make, the borrowers, they would have them send things in by mail. They would take forever to communicate. They would say, oh, you sent this in by mail, but it turns out you need these other documents. And it was just a scam to get fees. And the CFPB comes in and says, look, this is illegal. You can't do this. You need to pay not only need to pay the borrowers back, but they actually also said, you're not allowed to do this anymore, right? You can't actually be in the industry of collecting student loans anymore because we can't trust you. And that's the kind of thing that the CFPB does. That's that $20 billion, $25 billion that they've returned to consumers. It's just hundreds of, little and big actions like that to try and protect consumers and enforce the law that people, unfortunately can be taken advantage of.
So, listening to trying to prepare for this as well, like one of the things that our frenemies over at the Young Turks have mentioned. So I take this with some grain of salt, but they're big fans of the CFPB. The way that Cenk Uygur has described the CFPB is it was almost like an attempt to prevent like the predatory lending schemes that predicated the Great Recession, right? That the CFPB, had it been in existence, that sort of thing would have never occurred or would have been considerably less likely because it would have either mitigated or neutralized predatory lending. So, could I guess the CFPB prevent this sort of like if it was fully staffed and left alone the way it has been until Donald Trump came into office? Like, is that what it's designed to do to prevent not just like small or predatory actions, but also major calamitous predatory actions as well?
Yeah, exactly. I think that the largest single settlement was actually in association with the big Wells Fargo scam. I can't recall the exact details of the scam, but they had this thing where they were opening up multiple accounts for people, and they had all these sales incentives where, like, basically sellers were incentivized to open up accounts that consumers didn't necessarily consent to. And I think this was over $3 billion in terms of a settlement, just a single settlement from a single bank. That's why when you look at the total settlements that the CFPB reach, it can be kind of lumpy because sometimes, like you said, it's small things. Sometimes it's really, really big things. The settlement that I just mentioned with the student loan company was only about $700,000, but that's the utility of this agency. They're getting in the weeds, right? Whether it's $700,000 for a small collection of lenders or it's some $1 billion settlement from a major financial institution, they're kind of doing all of those things low and high, and it's what makes them, in my view, such an important institution. The last thing that I'll say is that one of the things that's important to keep in mind here, it's one of the things that makes a lack of congressional approval to do this thing so disastrous from the administration, is that what Wall Street is saying, what a lot of banks and sort of industry groups are saying is, hey, all these laws are still on the books. Like, in part, the CFPB was a part of state capacity to actually enforce these new laws from the Dodd-Frank Act, right? And so now you're in this kind of gray area, and a lot of banks aren't really sure what to do because they're like, oh, we'd love to go back to scamming, we'd love to go back to doing all these shady things, but these laws are still technically there, but now we don't have the CFPB, but we kind of, it's a very confusing
So it's
business
almost like dead
environment.
letter then without the CFPB or some sort of like enforcement body, right? I mean, otherwise it's just on the books and it's not actually being enforced.
Yeah, exactly. I mean, you have all these because again, there's no act of Congress here. So all these laws that the CFPB is charged with enforcing are still laws, right? They're still something that you need to enforce. In theory, you need to enforce them. And so banks and businesses, writ large, are kind of in this gray area where they're like, we don't really know what we can do or not do here, right? And you see, again, that's why you see these industry trade groups come in and say, this is kind of bad. Like, we don't like the CFPB, but like we kind of like the certainty of what the rules are and who's enforcing them. And, now we have this sort of decentralized enforcement from state agencies to civil suits. And, it's just a much more chaotic environment for banks.
So what you're saying is, ironically, that the very predatory institutions that the CFPB was designed to regulate might actually have some sort of discomfort by its absence because the laws are still on the books, which means in theory, if they engage in sort of like predatory practices, they could run afoul of the law. But there's so much ambiguity, which is actually a double-edged sword.
Yeah, exactly. There was a piece in the American Prospect by David Dayen where he talks about this. And don't get me wrong, again, like, bankers on net probably don't want the CFPB, but it does create sort of this shaky off ramp, right? It's just the most inefficient way to do things. In 2018, the Trump administration, they passed reforms to the CFPB to limit the regulatory scope and to limit the laws by which institutions were bound by those regulations. But again, that was an act of Congress. That was very solid, right? And so you end up in an environment where bankers and financial institutions are much more uncertain about what exactly they can do and get away with because of this sort of quasi enforcement. I mean, some states have their own state level CFPB, for instance, right? Like California has a state level CFPB, and you have civil suits that you can still get in trouble for. But it just, this gray area, whether you agree with the regulations or you disagree with them, the worst thing you can do in some senses is to have the regulations but have no central enforcement of them, because that leaves the business environment to be very, very uncertain And that's not necessarily what you want. Businesses, amongst all the things that they want from the government, they want certainty, and that's not what the Trump administration's offering by basically just saying the CFPB won't enforce anything, but you still technically have all these laws that you need to follow.
Yeah, so I think it's fair to say, again, based on the reporting and based on your analysis, that this really is on the net. Whatever ambiguity it provides for businesses, this is disastrous for American consumers, be they liberal or conservative, blue states or red states, and kind of part of a broader war by the Trump administration against pro-consumer, pro-labor, pro-worker safeguards established mostly by Democratic administrations, but some on a bipartisan basis. The thing I really want to focus on right now, though, is something else that's really key to this, which is, again, Musk in particular, Elon Musk, the most powerful unelected American in the history of this nation, a nexus, as we've discussed on Live and Learn, of not just unprecedented financial power and now media power too, by virtue of his control of X, now political power as well. Like, you could easily make the argument that he's about as powerful as Donald Trump himself. And the only thing that might distinguish the two is that one has the nuclear football for now. But I really want to focus on the conflicts of interest here, because this is actually part of a broader story. We recently heard that that Elon Musk will not actually file a public disclosure of his finances as a special government employee. He's not obligated to do so. So he's going to file a confidential report. And apparently, according to the reports, it's not even going to be shared with members of Congress, right? This is exclusive to the executive branch. So this seems to be fitting a broader parallel, a broader pattern of Musk creating conflicts of interest and really stripping away any sort of checks against them. Can you talk about why the CFPB seems to be freaking ethics experts and industry experts out, why its absence is freaking them out with respect to Musk?
Yeah, I think that this kind of goes back to the very improper nature of Elon Musk's position in general, right? So it's one thing if Elon Musk was like, maybe he was the head of the CFPB, right? He had to go through sort of an ordinary confirmation process. And as crazy as it would be to make him the head of the CFPB, a lot of Trump's appointments are pretty crazy. Same thing with like RFK Jr., who at the time of this recording, it seems like he's slated to be confirmed to the head of HHS. Like, say what you want about RFK Jr., but he's not like the shadow leader of HHS. Like, he went through the confirmation process. He had to do his ordinary disclosures. He had to be held accountable in a public hearing by democratically elected officials. And all of those, the reason we do all this procedure, it's not just for show, like Elon Musk seems to think. It's because we believe in democratic transparency. The thing that makes democracies work is democratic, transparent processes and shared horizontal leadership. When you have sort of this like shadow, quasi-private, quasi-public actor coming in and basically telling all these federal employees what they can and can't do, making policy, it's very opaque, right? And that goes down to the disclosure requirements as well. The reason you have disclosure requirements in an ordinary sense is because we think that transparency makes democracies run better. We think that democracy makes states run better. And so when you start to sort of obviate all those processes, well, you get a worse democracy and you get, the worst functionings of your state, which is something that in theory, nobody should want.
So, but in particular, though, like, what is it about the CFPB and Elon Musk effectively gutting it that exacerbates conflicts of interest? I guess my question is, are his businesses subject to enforcement from the CFPB? Would he be a target-rich environment for a robust and active CFPB?
Yeah, it's a good question. I mean, there could be some I guess like debt situations that Elon Musk is in. Obviously, he had to borrow money to buy Twitter, and just being the head of large corporations, right? You're going to have a lot of interaction with large financial institutions, and so it's possible that there's some sort of friction caused by the CFPB. I think that really, I don't know that there's specific issues that the CFPB is like targeting Elon Musk on. The
The
big
one that
problem
I've
is.
heard and the one that this article describes, it's not even
Mhm.
necessarily that they're targeting them, but Tesla is apparently a potential subject. Not like in theory, like, it's not just, I'll quote the article itself. It's not just Musk's burgeoning payments business that has raised eyebrows. It's also Musk's best known and most valuable company, Tesla. Tesla has a financing arm that provides car loans, and the CFPB
Yeah.
polices car loans. The Bureau does not regulate auto dealers, but it does oversee auto loans like the financing Tesla provides through its subsidiary, Tesla Finance. Tesla is on a list of securities that CFPB employees are banned from owning, according to a recent copy of the list viewed by CNN. That list includes obvious companies like JP Morgan Chase and US Bank, as well as some automakers that like Tesla have a financial arm. In other words, CFPB employees are not allowed to own Tesla stock, but Tesla's largest shareholder is front and center as the CFPB is being dismantled. So I guess these are some of the conflicts of interest that are being discussed. Not even necessarily that CFPB would necessarily investigate Tesla, even though they could, but that Elon Musk is essentially violating conflicts of interest regulations that other CFPB employees are subject to.
This is emblematic, I think, of broadly Donald Trump and his entire administration, right? For instance, if you were to go to like the FBI or security clearance subreddit, you would see a whole bunch of people saying, man, like none of these people would be able to get security clearances or be able to get past the FBI screening process if they weren't political appointees by the president. And so similarly, yeah, I mean, the CFPB, as an employee of the CFPB, you're going to have all sorts of portfolio and disclosure requirements. And similarly, I wasn't aware that Tesla offered direct financing to their consumers. But yeah, if you're offering financing to your consumers, either for solar panels or for cars directly, then of course you would be subject to the CFPB's jurisdiction. And of course, therefore, it's a conflict of interest. Like you said, whether or not Tesla is violating the law or doing scummy kind of like underground things with their lending, I'm not sure I have reason to believe that that's happening. The point is that conflict of interest exists not because necessarily you're doing something wrong, but because the appearance of doing something wrong and having a clear delineation between the regulated and the regulators is a very, very important thing for trust in government, for transparency, and obviously down the line for actually the operating sort of functionings of these departments where, yeah, if there's a clear conflict of interest, I don't I don't really see why somebody like Elon Musk wouldn't take advantage of that in his current capacity.
Well, the Trump administration is presently operating on the just trust this guy's ethics model. So I don't see that changing anytime soon. Very last question, because I want to be respectful of your time and want to keep this short. But do you expect that there is any potential life raft or some sort of like lifeline that would be sent to the CFPB or between Musk and Trump? Is this agency effectively dead for the next 4 years if they want it to be?
It's very hard to say. I mean, I'm not a lawyer. Maybe Pisco would be a better person to answer
I
this.
should have roped him in
But
on this, and you two could have like cobbled together an answer.
yeah, I mean, my instinct is that the Supreme Court is going to say, look, the president does have the power to just not staff these agencies if he wants, right? Because, unitary executive theory, the president can
And
do
there's a
whatever he wants.
Republican in office. That makes it so convenient, right?
Right, right. Of course, of course. And in some senses, the Supreme Court's already targeted the CFPB. The CFPB is kind of they get their funding from the Federal Reserve. This was already a Supreme Court case, but one of the things that they ruled on as well was that the CFPB is not sort of technically independent. So originally, the Obama era head of the CFPB, he tried to appoint his own replacement with the argument that, hey, this is an independent agency. The Supreme Court and Donald Trump comes in through the law and says, well, no, you're an agent of the executive. I get to pick the head, right? And so similarly, I don't really know if there's going to be any lifelines for the CFPB. There's a chance that the Republican House, I mean, maybe the fact that they're doing this by essentially executive fiat is a sign that there's not actually the votes to just completely get rid of like the Department of Education and the CFPB. And so unfortunately, this could just be one of those things where, a Democrat comes into office in 2029, just has a gigantic mess to clean up. Oh, we have to hire 300 people because this, agency's been completely hollowed out, which is, of course, a huge mess. And I think that what's important to kind of, we just have to recenter this on what the CFPB does, right? The goal of the CFPB and what the CFPB has done since it, came into existence is prevent financial institutions from scamming customers. That's all they do. There's no nefarious deep state.
That sounds woke. That sounds woke as fuck to
Yeah,
me,
I mean,
Econoboy. I mean, that is the wokest thing you could
yeah.
possibly say.
You can go to the CFPB's website. They have like an enforcement section for now, I guess, where you can
Yeah.
read, where you can read what they've done, and that's where I pulled the case that I referenced earlier. And every single one of these cases is like, oh, improper disclosure from financial institutions, delaying processes, scamming out of money from consumers, improperly charging fees. Like it's all just scams, right? And so we have to ask ourselves, what the hell could be the good reason for getting rid of the CFPB? The answer is there's just not one, right?
Yeah, the
There's
answer is that it hurts Elon Musk's feelings, unfortunately. But
Yeah.
Econoboy, we will leave it there. Where can people find you?
Yeah, I write most of my stuff at econoboy.substack.com, Econoboy YouTube channel, and of course, Live and Learn, Josiah, our podcast.
Which we have at the time of recording tomorrow. So I will see
Exactly.
you then. And maybe this could be fodder for a good Econoboy Substack article that I could review in subsequent videos of mine covering this. So I'm just saying.